Today I'm going to show you how to journal your trades and how you can use them to your benefits or advantages. So for next time you go trading, you know where not to fuck up. A good trading journal can help you follow your trades, whether it is a stop loss or it was a take profit. And you can look back, for example, let's say we hit a stop loss, and when you journal the confluences that you used for that trade, for next time, you can see which confluences not to use or which combination not to use those confluences. And when you hit the take profit trade, you can journal down which confluences you used or which time you traded, hour and minutes. So for the next time, you know, okay, if the time is not the same as when it was when I hit the take profit at the last trade, then I'm not going to trade at this time. Or for example, if the confluences or the combination of confluences aren't met the same way they were when I hit the take profit, I am not going to take this trade now. So you basically have an overlook on which combinations and which time the trades that took take profit or stop loss, and it also helps you sharpen your strategy. For example, if you see that a lot of times a confluence doesn't work out, for example, let's say you use order blocks and most of your stop loss trades were used by respecting the order block, then you know you're going to remove the order block from your strategy because it causes most of the stop losses. Let's say you bought Nasdaq, as I'm going to show you on the screen, and let's say you have used liquidity sweep and inverse fair value gap as your bullish confluence, and in this case, let's say you got stopped out. Then you have to look why you got stopped out. For example, let's say the price went lower than you expected and hit your stop loss. And now you need to look at why the price went lower. So if we go back, as shown in the example, you can see a fair value gap on 50-minute or 30-minute, I can't really remember. And you see that most of the times, at least for me, how I backtested on Nasdaq, it will always hit the fair value gap if it's under the liquidity sweep. So even if the liquidity sweep has been made and there's an unfilled fair value gap under it, it will still go down most of the times to fill that fair value gap and then go up. So next time, you know, for example, if the liquidity gets swept and inverse fair value gap gets inversed, like fair value gap gets inversed as your bullish confluence, you're still not going to enter unless there is a fair value gap waiting under your setup that hasn't been filled yet. So you need, for next time, you need to wait for this fair value gap to get hit in order for you to go long. Okay, so let's take a look at this example on the screen I'm showing you. So this was Nasdaq on 4th of September, and right here we have a liquidity sweep of previous day lows. I believe they were Asian lows, and right here we get an inverse fair value gap. So these were 1 hour liquidity sweeps, and on inverse I entered long on Nasdaq, and if we set our position, so I entered here, I put my stop loss somewhere under this inverse, somewhere here, I can't really remember, and my take profit was, I guess here somewhere, I don't know. And then as you can see, price came down and swept me out of the position. So then I was trading with my friend and he noticed this 5-minute fair value gap, but I didn't follow the same trade that he did because there was little greed involved, but let's leave this for now. As you can see on 5-minute time frame, I have marked a fair value gap that hasn't been filled. It was caused by an opening gap, which happens a lot of times on Nasdaq. And as you can see, here is where I got stopped out and price went lower to fill the 5-minute fair value gap, which I did not implement in the strategy yet. So when this fair value gap got filled, show you. Okay. It also inversed fair value gap after that. So as you can see, this is okay. This is a really tiny fair value gap, but it still counts as a fair value gap. So fair value gap got inversed and price shoot up. So as you can see, not only it would hit my take profit, the first one that I planned, but it also hit the highest one. So the daily high actually that my friend ended up hitting, of course. So then I journaled the first trade as losing trade, of course, and then I also journaled a trade that I missed, that my friend took, of course. So right now you can see here a lot of trades. I mean, it's not really a lot of them because this was a trading journal after 25th of July, which is not the start when I started trading the funded account. I had traded before that I journaled in the different file, but leave this for now. So here you can see how I journal my trades. First of all, I type in the time that the trade was taken, then I move on to the date that the trade was taken. So this is really important, the dates, because a lot of times you will see on which days of the week the market is most likely to provide you with a good price action and a prominent price action. And in the third column, you can see the risk. So this is for every position, how much of my account I risk per one trade. So here you can see I use 1% on average. I use half of the position on the low quality trades. Those are like the ones where the price action isn't really showing you good confluences, or is showing you good confluences, but the price action overall isn't very volatile. That's the cases. These are the cases when I will use half of the position. Then I use the confluences. So for example, 1 hour liquidity sweep, 4 hour liquidity sweep, 4 hour fair value gap, of course. And the results are very important. Take profit, missed, stop loss, and in the cases you hit take profit, you can see, okay, I used 1 hour liquidity sweep, a fair value gap, and 1 minute inverse fair value gap. When we look at the stop loss trades, I only used 1 hour liquidity sweep and 1 minute inverse fair value gap without the basic fair value gap. Here, another take profit, 1 hour liquidity sweep, 1 minute inverse fair value gap plus fair value gap. So fair value gaps are very important, and here you can see again 15-minute liquidity sweep. I don't use this one often, but in this case, plus fair value gap on 15 minutes, of course, and 1 minute inverse fair value gap. So you can see most of the times I hit stop loss, I haven't used the original fair value gap. But in most cases, for take profits, I have always, actually for all take profits, I have used basic fair value gaps. That means when the price sweeps liquidity, it will fill the fair value gap from before, and after fair value gap gets filled, it then goes up until it inverses, so it closes above a fair value gap that is some sort of like same as break of structure, but fair value gap instead of a high. And when that happens, this is my bullish confluence to go long, or vice versa to go short. After that, we have filling. So this is kind of irrelevant, but it's still a good thing to know. For example, you can see when I missed the trade, I was stressed. When I hit take profit, I was calm. Okay, in most cases, I was calm because that's what you have to be as a trader. Even if when you miss or hit stop loss or take profit, you have to be calm in all cases. Missed, unfocused, missed, energized. So in all cases, when I was in most of the cases when I missed a trade, I was always confused or unfocused or energized. But you can see most of the times when I took the actual trade, no matter it was stop loss or take profit, I was always calm. So that's one good thing to notice. So don't enter the market when you don't feel calm. Next one, we have risk to reward ratio, of course. So in over time, you can see my risk to reward has improved a lot. Here we have 1:1. So I was making 1:1s before a lot on XAUUSD, but since I started trading Nasdaq, my risk to reward improved a lot. 1:3, 1:2.4. Okay, this was the best trade I took. I hit like 380 euros, I think, on this one. It's a very good trade. And that's how I came to the conclusion when I saw those fair value gaps on the take profit trades. I came to the conclusion that maybe I need to forge or change my strategy. So I went into my strategy file, the Word file I have, and wrote the fair value gap on any time frame that I have to use before I enter any position. So if liquidity gets swept, first we wait for the fair value gap. After the fair value gap gets hit, then we wait for the inverse fair value gap to enter the position. And right now I have been also thinking of implementing the fixed range volume profile tool, because I noticed that fixed range volume profile is more precise in plotting a fair value gap on your chart. So for example, this is just a quick showcase, this wasn't planned to be in this video, but I will show you anyways. So for example, we have XRP here that I invested in, and you can see, let me just hide this for you, the position, okay. For example, let's go to today here. Let's take a look at today's price action. So as you can see, I plotted my anchored volume profile from the lowest point right here, and it extends automatically to the present time. And right here you can see a lack of orders, and what do we have here? A fair value gap. But of course, you can draw any fair value gap. You can draw a fair value gap right here, but the problem is there are orders that were made on this fair value gap. So this fair value gap is kind of irrelevant, but here we can see a big lack of orders, where you can also spot a small fair value gap. That means the price will come back to this point where there is a lack of orders to fill more orders, and then maybe go up. In this case, price, as you can see, slowed down at this point. It hasn't broken the fair value gap yet, so this might be a bullish confluence for the day for the XRP. As you know, at the start of the day, crypto starts going down most of the times, how I've seen, and then in the afternoon or later it starts going up. So this is also one of the good confluences. I haven't used this on the Nasdaq yet, but I am planning on implementing it, so I can use it for identification of fair value gaps. We can maybe try plotting it right here. What is today's date? Okay, I will plot it right here from the 12th of September. And here you can also see a fair value gap and a lack of orders, of course. And this is just to be more precise, because again, not every confluence will be as prominent as the ones that you use the volume of the trades made at this point. So you can see the regional fair value gap extends to here. It also fills this small point, but where the lack of orders were. And you can scale down this fair value gap to only the point where there were most or least orders made in this case. So I will try to implement this tool. It is very useful to my strategy, of course. And again, if it won't work out, then I will see this in my trade journal, because if I hit stop loss, of course I will type in the confluence that I used. So this will be it for this video. I hope you learned something. You can leave a like, and I will make more educational videos like this. I know I'm not the best speaker at this stuff, because I'm not I don't speak often, and not for like some education purpose stuff. So this will be it for this video. Hope you enjoyed, and I will see you in the next video where we will probably discuss some more mentality tips.